Right. Oops. No, I just realized. Got a little overzealous. It is actually only the 6th and not the 7th. So funny, I'm broadcasting for Saturday. Oops. Let's see. Let's go over here. I forgot that I changed it yesterday, and I didn't even bother to look today. Yeah, it's one of those mornings. One of those mornings. Anyway, so non-farm came in slightly higher than expected, as well as the unemployment change. Last time was also just a little bit off. The unemployment rate, we nailed it. We said don't expect it to change. Didn't expect it to drop. Expected it more to hold at 3.8, and it did. It held at 3.8. Now, the unemployment rate in Canada also did not increase. It also held. So again, no changes in those. Now, the average hourly earnings kind of goes along with what we've seen data-wise lately, where you're seeing the job switches are getting less money compared to the job stayers, right? Um, so bit of difference there, but not, nothing earth shattering like, oh my God, this is this is it. We've seen the turn. What happened already? Oh, you did it again, didn't you? Accidental client attorneys, huh? No. What'd you do? I hate YouTube and their ads. They should be sued. That like, a child can be watching, videos on a tablet, and next thing you know, it's, accidental accidental auto attorneys. Here. Did you want this or no? There you go, buds. Um, so data kind of came out as we would expect. Is it yeah, what? Um, I think it kind of came in line with what we with our expectations were. So we'll kind of see where we go with now. It looks like there's not a lot of movement in the last 24 hours. When you see the euro dollar at 13 or 12, 14 now, 3, 7, 15, 13. What? Go sit down. I don't know what you want. Use words. What do you want? Go ahead. Go. You want to sit on my lap? Is that what you want? You want to sit up here? Your tablet? Hold on. Here. Here. There we go. There we go. No, if you're gonna cry, you have to get down. I see. I see exactly why the accidental attorney thing is sitting right. It looks like they have two little kid cars, so it looks like a video for him. So overall, but it's just a wrapper. Everything came within expectations today. The movements occurred because there was prior movement up in one direction, and that's what kind of led to, again, the movement that we're seeing out there. The pound yen, 77 pips. We're seeing pound strength come back into the market. You're seeing the euro pound down as well, 13. Dollar CAD, not the the look that you would tend to expect to see, but again, down 49. We were very very high. We had mentioned that yesterday, and then obviously the oil situation was coming into play as well. And then dollar yen up 67. Again, kind of a blunted move. I think everybody's looking at that 150 as an area where there'll be a major collapse. So again, I think it's a little bit a little bit more blunted. Excuse me. Start off early. Ah. All right, so that's where we are. Obviously, Saturday, nothing. Sunday, nothing, and then Monday morning we walk in with some confidence. So not a lot of not a lot of early morning news on Monday, October 9th. Go over into the charts. Up in VIX. So VIX is a little bit elevated, and again, this is the news. I don't. There's no reason for me to pay for additional VIX data. Nice to talk about, but again, no reason to pay for it. You can see a little bit of a spike up again, holding high back into the 19s as you would expect. Again, non-farm, it's a very, very big release. It's traditionally, and again, I don't know if there's a difference between traditionally and historically, but I guess tradition one is I guess facts and one is tradition. I guess traditions could be wrong. I guess. But anyway, non-farm is considered like over time the biggest mover of the market, right? Because it kind of goes into so many other things. Right now, I would say it's more of like an FOMC interest rate decision is the biggest market mover right now. But again, I don't think that's not a long term thing. I mean, obviously, interest rates have always been a mover when they happen, but they don't happen regularly enough. There's not enough changes, and it's not a focus of most people for most of the time. So not nothing that we are you know consistently looking at. In this case, though, obviously a little bit elevated. Now the dollar, yeah, you can see a little bit of a pop. It kind of flatlined down here. Kind of got driven down. You can see that the peak this morning was really the European session. It drove it just straight down and kind of loaded up, and it started to move a little bit. And then 8:30 came out, and we went from what 106.35 up to 106.98. So, hey, stop. Now the dog wants to troll me. We saw the big surge up. Now, again, you know, how do you take this data? I mean, technically, we had, you know, one red or two red and one green. Um, Again, the average hourly earnings. I think it's good for the overall market today that this was not a point three. If it had come in at a point three, showing that again there was still an increase in average earnings, meaning people are getting paid more. Again, kind of one of those signs of inflationary pressure. It kind of gives the Fed a way to say, "Look, there we go." Now, wage inflation shows that it's slowing a little bit, still positive. And again, the unemployment rate. Again, the unemployment rate really doesn't matter. It's a nice to see, kind of nice something to talk about, but it's not a true. Um, it's not really a true gauge of what's happening. Even though a lot of people are like, "Oh, the unemployment rate, it's important." It's not real. It's kind of an artificial number. It's people looking for jobs, people not looking for jobs. It's not as good as like the labor utilization rate. I think the labor utilization rate is a more important figure. Um, but again, you guys got it. All right, so that's where we're with the Dixie indices, all in the red. Well, well, stop hitting the buttons. Okay. Um, so hit it. Stop whining. Um, all the indices are in the red. I think they're all justified. Again, is it great that people are getting hired back? Yes, but remember the biggest problem that the Fed is talking about right now is a hot jobs market. Um, Today further exaggerates that it is a bit more of a hot, jobs market. So again, even with the adjustment last time, I mean, the adjustment last time they said it was 187 and it was actually 127. A little bit of a miss there, right? 40,000 jobs. I mean, if you think about it, if it's a $200,000 number, 40,000 is quite a nice percentage that one missed by. And then the expectation was going to go up, but not only did they add that many last month, and you would say, okay, well, maybe this is lower because they added the extra ones last month. No, 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 no. They added even more, right? Showing that it's accelerating. And what do we see at the same time? The JOLTS data also going higher. So as far as the employment, like the jobs market goes, people are getting hired, right? People are getting hired. The unemployment rate was a little bit down, and at the same time, job openings, which is the main driver right now, also skyrocketed compared to what the expectation was. So, yeah, it's kind of in the Fed's court, and everybody'd say, "Oh, all the slowing, all the slowing. Fed's done. We could be at the top. We could be at the peak." But remember, the job market is what the driver is, and we know that again, until the last few days, energy costs have been driving higher. So, yeah, I think it's kind of a here. Take the acorn, but buds, I'm working, buds. I'm working. Um, yeah, not necessarily the situation. Hey, you can go in the other room. No more. You either sit and you're quiet or you go in the other room. Give it to me. Look, puppy cars. You love puppy cars. So yeah, it's there. This is an interesting story too that I saw a headline for too. Yelling to focus on World Bank and China at global meetings. Um, I think it's interesting, and the crazy part about this is, Yellen. It doesn't even have a color, right? You see, these are important. These are not necessarily as important. She doesn't even get a color anymore. Again, her position has completely been eroded to non-important when she talks or stories about her. Um, where her predecessors, when they made comments, they were always considered high movers of what potentially could be coming. People would dissect, and look at very very closely, what it would be. So hit it, Kip, do it. Um, Not even talking about it. Talking about we can discuss new ways to limit revenue from oil sales. It's funny. We're going to meet with senior Chinese officials and may discuss new ways to limit Russia. So, do you think China has any desire to limit Russia's revenue from oil sales? No. Why? Why is that? I mean, why would that affect China whatsoever? So it's interesting that these are the comments that she makes, and this is where we're kind of going with this. Like, let's go meet with Russia's closest ally, and we're going to talk about how we can screw Russia over. No. So, It's nice that that's what they want to talk about, but again, it sounds like a bunch of 5 days of vacation in Morocco for Janet. We'll see how it goes over there. Again, wrong woman for the job. Said that from the very very beginning, and again, she's taking the position. And this is we're going to meet with senior Chinese officials to discuss new ways to limit Russia's revenue. Why does China care? China has been the biggest benefactor of, and actually not only benefactor, but they have been one of the biggest enablers as well. So, and again, why would they want less profits to go to Russia? Russia, can buy technology and things from them. So, yeah, that's where we're at. Yeah, hey, is what it is. So anyway, indices in the red as they should be. And again, is today's data all gloom and doom? Is the worst thing ever? No, no. I mean, more people getting hired back is great. It means there'll be more people spending money. Uh, Stop. Overall, it should be a great sign. It's just that people are so worried about interest rates. That's really what it comes back down to. People are so worried about interest rate changes. But overall, again, it should be positive data. We should be celebrating it, but we are not. Oil, man, we talked about $80 of oil on Friday. We're so close. We're at 81.66. It's almost there. We're only down 66 cents, not even down 1% today. It's like, man, can we do it? Can we get to 80? We talked about how cool it was going to be. It's like, oh God, yes. Go to 80, go to 80. Now, again, my gas prices haven't really dropped. I think actually it's not true. Sam's Club was 235 at the beginning of the week. It was 228 yesterday. All the other gas stations in the area are still at 350. I'm sorry, not 3. Sorry, 328 and 335 is what they were this week. The rest of the gas stations in the area are still 355. And again, normally it's only a 10% difference, but there was a 20-cent difference yesterday, and I was like, they're trying not to lose too much money on the gas prices or the purchases they had. But it's moving in the right direction. Natural gas, though, it's like, what the heck? We're up another 1.6%. It's funny. Janet wants to talk about, making money on oil. But remember, it's the United States and it's Russia have natural gas. Those are the two exporters of natural gas. And yet they're not talking about limiting their profits on natural gas. It's like, is that because if you collapse the price of natural gas, we also take a hit on that one? It's kind of a cut your nose off to spite your face type scenario. So yeah, gold holding at that 1817 again, really no movement at all. Silver creeped up a little bit again, still playing with 21, so not a lot of movement there. All the charts are pretty much going to be the same. Now, this one it kind of loaded up, but it was again driving down, building up a lot of sellers, punching up, punched up just a little bit beforehand. About an hour beforehand, it really kind of put a new high, and then it's a red candle, but you can see that the wick is actually higher on that one. And then the collapse down. And again, this is a nice move. 50 pips, almost the daily ATR in one candle. So yeah, kind of did what it should have done. Now the question is, where do we go with this? Is there going to be a big reversal? And overall, I would say it's going to be a little bit harder for us to have a reversal today. I mean, the market this week has been dollar week, dollar drop, and then magically non-farm comes out and we come straight back down again. And understand the touchiness right now. Last week it was, hey, core PCE doesn't necessarily matter, but they keep mentioning the jobs market, the jobs market, the jobs market, and this week the jobs market crushed it. I think right now, again, I think dollar strength will be the name of the game, kind of the trend today. I think it pushes back down, and again, 63 is sitting right down here. It's only 28 pips away. We got areas here, and again, if we can start pushing through, big question I have is, we would need about 60 pips to go through and kind of trigger this bottom side of the Harry Potter trade. And with that triggering, again, if it moves 60 pips from where we are right now, that's 1 day's worth of movement in addition to what we already have. Probably not going to happen, right? Probably not going to happen. It's just a little too much in 1 day. But it kind of rolls us into next week. And rolling into next week, it's kind of like, all right, here's where we are. Could we have a potential trade in here? And I would say it's, yeah. I mean, there's a potential trade set up in there. It's all right. It's all right. Is there much we can do with it today? I don't think so. I think the Aussie dollar will pretty much kind of stagnate at this point. We probably stay within inside of the range. Maybe we push down. If we're looking and again, we're playing with the 63 number here. Here, I'll just put on there so it's easy to see. 63 right there. All right. 63 is an area where we had buyers in the past. So most likely, I would say it probably comes down to here. Sunday night is just a long trade. I don't think so. Um, I don't think that Aussie will have enough upside potential versus what the dollar will at this point. Excuse me. We just haven't heard any comments, right? We just haven't heard the comments. So yeah, I think it comes down. Aussie yen. Aussie yen very flat. Yesterday we talked about 64.69. You can see yesterday morning we drove down and we kind of hit it again. And we hit it again and we hit it again. It's like, okay, wait a second. Here's one, here's two, here's three, and we're basing in there. And then it kind of pulled back down again. You can see it's just stuck, right? It's just stuck. There's no 50 level, no other fib levels. It was confirmed, and we've kind of bounced off of it enough times at this point that not really a great trade setup here at this point. There is a level above, and that is kind of stacked right above the 50% retracement level. This one, again, there's no real main trade here. We were looking for somewhat of a base and push to the downside, and really we're kind of where we were yesterday, right? Not enough strength out of the Aussie, and obviously not enough strength out of the yen. So I think right now it's kind of like, where does this one go? I think this one's lining up for next week. I think it's lining up for next week, and I think this could be a level, the 95 level. Again, you can see 95.03, super close. I can break it down if you guys really want. Right there. 95 is right on the 50% retracement level. If we can rally up or Sunday night get up there, I think that's probably a decent short. And again, Aussie yen becoming a short also helps the Aussie dollar short, which is a dollar strength based move. So overall, I think that's not bad. It's the best thing we got. Is there any buys in here? Not really. There was just a lot of chop down, chop down, chop down, chop down, chop down, chop down. So not really you know, the ideal kind of spot that we're like looking for, right? So take it for what it's worth, right? I think if we get up to 95, we short. Otherwise, we wait for this to reset for next week. There's no risk. Again, Australian market is already closed. So is the yen. It's purely just a proxy play that's changing this now. Now, euro dollar. So euro dollar, we're looking for long, and really, we broke through at 2 o'clock, and we kind of just held and maintained and maintained, and kind of hit it again, and kind of went through, and it didn't really stop, and then it kind of came up again, and you know, not a super clear kind of Harry Potter based trade, and then really, again, I think this is important to point out here. This is the European Open today, and it started to go high, 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 and it's like, oh yeah, it's getting ready for a short, and then when the news came out, boom, it was a big drop to the downside. So ideally, we were looking for this to go up higher, but again, no real conviction here. And then it didn't do it again. Stop. Stop. All right, get down. If you're gonna cry, get down. All right, get down. Go ahead. You lost your chance. God, so hard teaching 2-year-olds. He actually turns 2 on Sunday, so this is his birthday weekend, right? So yeah, we decided to enter the terrible twos, a few months early, right? He's an overachiever, right? A little early terrible twos, but yeah, officially, I can't complain about the terrible twos because he will be too on Sunday. So next week should be really exciting. But anyway, again, not a lot of conviction. Europeans drove it straight up, and we said, we drew this on a couple different charts, saying, okay, mark the European Open, and then mark where news is, and see what direction it pushed it in. And what did it do? It loaded it up, loaded it up, loaded up, and then a big drop to the downside. And again, this drop was about 86 pips. It has a 70 pip daily ATR. So yeah, kind of telltale. And it's hard to do much with it after something like non-farm. Now, it found buyers exactly where it should have. You can see there was a level down here, and it was a confirmed level, right? Rally, basing sideways, a little pop. Boom, came back and touched it, confirmed it, and shot it higher. And that's exactly what we ran into on this side. So it's kind of done what it should have done today. It did push it a little bit deeper, right? It did push it a little bit deeper. I think if it comes through, it probably starts to break and push down towards that 104.50 range. Is it a trade for today? Probably not. Pull these guys off now. I don't think we'll have enough time today. If it comes down and starts bouncing around here, maybe we see a little bit of a retracement. We did get some comments out of the Euro too, talking about how, where is it? Right here. We're getting on top of inflation, right? Versus everybody else is like, we still got a long way to go. Knott's over here talking about, policy's in a good place. We're getting on top of inflation. It's kind of like, oh, are you done? Is that what that means? You were done? So, yeah. eat? Go tell mama. Go tell mama you want to eat. I can't help you right now. Go tell mama you want to eat. Um, he's like, I need more candy. I know exactly which one. So again, I think we go through. We do have to break through this level. It's Friday. I don't think we're gonna have enough time for it. Again, if we start the base and push through, there will be a short down to 104.37. But ideally, he wants to eat. Can you give him a protein bar? Um, I don't know that we'll have enough time today, but it is a decent level too, guys. I mean, you're talking about 10 pips worth of risk, and you got about 50 to run to the downside. So you have kind of a 1 to 5 setup to move lower. Okay. Euro pound. Obviously, Euro pound very very choppy. We're talking about coming back into a buying area right here around 86.37. Again, Europeans took it down. We kind of started the base and then started the chop back and forth, and we're kind of still in that same area. Now, the good part about this one is we are getting in the very, very bottom side of the curve. There are buyers down here. We have seen, some comments that are pretty weak as far as the euro. So we kind of need more of a bounce on this one. And actually, they said here the lower long-term range in mind, right? Pound dollar with a lower long-term rate. So again, I wouldn't quite call this long term, but if you do long term, if you cycle back to here, we're kind of more on the upper side. But in the more recent high to low, I think what they're meaning is not a lot of trend. It's slow. I mean, I guess you could try to be like, hey, look, there's a top there, and again, kind of a bottom there if you choose to erase this. So kind of a slowly descending channel, but for the most part, we will be coming back into buyers when we come down in this level. So we're getting close. These markets only have 2 hours to go, and they are done for the day. Done for the weekend. They are out. So again, is there a big trade setup in euro pound? No, not really. Oh, I'm sorry. This comment is pound dollar, not euro pound. I don't think we're gonna have much more play on this one. I would say at this point, they'll push just a little bit longer. I think going into next week, we look for some European strength. And again, I'm okay with the strength. Again, comments about how the UK is doing good, right? Right. That they're on top of it kind of makes sense where we're at, right? So again, pushing down, maybe a little bit of a retracement back up again. All right. And again, not as ECB, but not like, put it this way. These statements, although they seem bearish, talking about policies in a good place, these are more positive based comments, like they actually have control over it. The UK situation, I think, is a little bit different, and that's why I think this one goes higher. Again, because the UK is still kind of at the mercy of, kind of the market. I don't think the UK has as much control, for lack of a better word. We'll just leave it at that. Euro yen. So euro yen pushing back up. We talked about a level here. We kind of almost got up to it before the yen took this one again. This is a proxy play. Funny enough, though, it did kind of Harry Potter it, right? 1, 2, 3, 4. Base in there, came back up, grabbed it, and is now pushing higher. So, it's still there. You can see that it kind of slowed in that area. Again, this was the not BOJ intervening. Anyway, 157.68. Drop base comes down. It is a little bit front run by the 78.6. Yeah, I mean I think top range. I think again, nothing changed from yesterday. I think here's your bottom side. I think there's your top side. We do have buyers coming in. There's a little kind of yesterday at 12, we came back down and grabbed those buyers. So again, you got I think you put a warning label right here and say, hey, listen, if you're getting short, be very very cautious at 156.25, 26 ish area. As that comes back down, those buyers will come back in and rescue. We're kind of sitting right in the middle right now, so it's kind of a hard play. But I still do like this top. Again, if we can get that with like a Sunday night open or like a Monday or European open, that'd actually be a great European open. Like if we could get it there, how much does that have to move? That would actually be a nice little 66. It's about a half day's worth of movement. That wouldn't be the worst of levels to kind of take a short off of, right? So keep that on your homework, right? I mean, right now we're kind of smack in the middle. Buyers and sellers here, buyers and sellers right here. Not much else. And again, the market closes in 2 hours for them. So pound dollar. Again, pound dollar is going right down the middle of the buying and selling area. You can see though there was a level. We pointed this level out yesterday that this was the European part. It was backstopped by the 786, and you can see that it came up and got stuck here. Now it ended up moving much farther. The 1 to 3, and again, this is one of those ones that you would have had profit target one there, right? And then profit target number two on the other side would have been approximately there, right? So you can see both of them got punched through. The alert did not trigger, so it didn't come down and break 103 yet. It came down to 106, right? 120, 106 versus 120, 103. I think we're in a good spot for this one. Again, we're starting to see this one trying to pull back again. Again, parabolic move. It's trying to get all the way back again. Overall, I think once all the market drama is out on this one, um, I think we see this one turn and roll back to the downside. I do think next week this one probably triggers. Again, this could be a Monday morning based trade as well. But again, it's got to wash out all the news trading for today. I mean, this is such a big push. Everybody and their brother is shorting the dollar. So again, you're seeing them kind of get washed out of the market now as this one retraces back to the top side. So yeah, I mean, this is kind of what you expect, and understand too. Here, I'll move this out of the way so you can see it. Remember, we're looking for a basing level. That basing level has been touched, right? It was touched here. It was touched here. So it's actually a level, right? It's a level. So decent parabolic retracement type setup. Okay. Too late now. It's a little bit too far off though. About 50 pips higher. So yeah. As far as I think it's important to note too. Do we take this one again up here? So it's been kind of pushed deep twice already. I think you got to use a little bit of caution with it. This one did kind of chop around in here, came up, chop, chop, chop. Um, if for some reason we're able to rally all the way back, yes, you could potentially use this for like a Sunday night overnight base position. Um, again, we may see, they may slam some dollar weakness in Sunday night, and this could be either a European or a US based open mark. The move doesn't require a ton. It requires about 56, 57 pips. It's got a daily ATR of 87. So, could it move that far? Yeah, it could. It's within range. And again, that parabolic move, you tend to like to see that move up. So, it is not the worst, right? It is not the worst. Um, yeah, it's not bad. It is not the worst of trades out there. So take it for what it's worth. But right now in the middle, what do you do with it now? You know, it looks like sellers are trying to stop this reversal back again. But right now, it's everybody that tried to get one short at the open is now trying to get stopped out. They're just trying to wash them out of the market right now. But I like the 2106. Will not be surprised if this one ticks down. Right. If that one ticks down. Ideally, though, if we can get a Sunday night up here, or even like an Australia or a European Open, I do like the 122 mark as well. Pound yen. Again, did it go a little bit higher? Yeah, but we knew we had this little hiccup right here. If you wanted to move this up to there, you could, but we were just trying to capture. We're trying to capture this side because we knew we had selling in there, but this is where the near term zone is. Right? It doesn't really matter. It's the same point either way. Again, are you playing the pound yen as a proxy? No, no. You're not playing the yen proxy versus the pound. Now, could you have? Sure. Yeah, it's a big mover. Um, Strong mover. That one candle was about 118 pips. It's got a 137 ATR, so not necessarily a full day of movement in there. But overall, I mean, nice move, right? Nice move. What do you do with this now? Unfortunately, we're gonna run the same problem. It is it's Friday. There's no additional news that we would expect coming in. I think really I mean, there's not really much else to say on this one. Not really interested in using it again. Kind of big. 128 pips. Kind of a far move, right? I don't think it's going to get up there. I mean, I think this one, with the way the wicks are lining up, I think this one drives back down again. Sunday night open, European open. So yeah, so that's what we got right now. Again, look at these three: Sunday Open, European Open, U.S. Open. If we can get up to the 18202, it's not a horrible short in there. There worse levels than that, but right now I can't use anything for long in here. This level has been chopped, and again, it's been maintaining and holding well. Eventually, when it does break, I think we do have a run back to the downside, but we're a little bit far from it right now. You're looking at 130 pips. It would take a lot to move that much and trigger and continue to push. So, um, yeah. Dollar CAD. All right. So, is there any movement in the dollar CAD? Not really. Kind of expanding back out again, but have we really changed that much? 16 pips in 24 hours. And the last hour has been kind of more up with dollar strength, which you'd expect. I don't think this one trajectory changes too much. I still think we're looking for 137.93. It's got some room to run up there, and again with the, you know, what has it got? 70 pips up, so it's got a day's worth of movement to get back up to that level. With oil weakening, right? Again, oil getting closer to 81. God, hopefully we can. Somebody will get this farther down. That would be awesome if we could get this one farther down. If we could, right? If we could get it farther down, or if we could get a little bit farther up, I think it's a decent short from 138. I think 138 for the dollar CAD is a little bit high. Again, oil obviously is taking an effect. It's weakening obviously it's weakening the CAD, but at the same time, having twice as many people hired back will also increase demand on oil. So it's nice that oil is down, but that's more people driving or more people working, which tends to lead to inflation in energy prices. Because, hey, you didn't expect that many people to be needing fuel, but now they do. So, again, this is one of the inflationary pressures of oil right now. Dollar Swiss. So, dollar Swiss, it didn't quite get down. We are looking for 101.06. It sucks. This one missed it by, um, yeah. So we were looking for 91.06 to be able to get long here. It came down to 91.09. So we missed it by 3 pips, and then it was a nice explosion off. The explosion from there was about 67 pips. It's 1 day's worth of movement in two candles. We got close. Unfortunately, that happens sometimes. Again, you know, the it ended up using this level versus this one. And again, as a profit target, yes, that was the right level. But I really was like, hey, listen, they're so close together. Um, it ended up going with a really, really aggressive stance. And that happens sometimes. There's nothing you can do about that. There was plenty of opportunities out there. You can see it's coming back and it's using that 50 level. There were so many different opportunities to trade today. And again, this is one of those hard ones. You have a confirmation here, you don't here, but again, if you're looking for shorts, that's where your profit taking needed to occur, and that's exactly what it did. It grabbed this level here, used that, and used it as a bounce up point. So again, like this one north, do we have sellers up at the 50 again? I don't love those sellers as much. I think those sellers probably come up closer to the 618 this time, up at like the 92 is right there. So the 91, 95-ish level, 91.90 level is I think really where we're looking for. And again, this could be a Sunday night open till the US Open, right? If we see dollar weakness rolling in, which is very common. You tend to see that. Friday, Sunday, right there. So wherever we open, say we open here, just this push right back down, right? Somewhat of a push like that direction. Okay. Um, Again, would not be surprised if we see dollar weakness in the Sunday open. Okay. Dollar yen. So dollar yen. Now this one, very interesting play here. We said, okay, see what happens between European Open and news time. And for the most part, it went up, but then I lost my cursor there for a second. So where did it go? You can see about an hour and a half ahead of time, it started to drive down. And then 8:15, what did it do? Oh, no, 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 no. It drove down. And there was kind of a level of base in there, but it drove into it before news. So, easiest of all of them to trade with news? Not really, right? The spike was about 64 pips, kind of muted, right? Kind of muted because we're back up into that 149 range. But again, the market magically just happened to show you again, kind of showed you its cards, right? It was rallying up. It was like, oh yeah, we're lining this up for short. Oh, wait a second, news is coming out, and then it shot right back down into that level of basing. So interesting how that one worked out. And again, not the biggest explosion, much bigger explosion than some of the other yen pairs. Again, the other yen pairs you're seeing it head to the downside, kind of more that yen strength coming back in, and this was dollar strength versus yen strength, and it only caused a 64 pip pop. I would expect this one to tear back down again. I think this one comes back down, probably lays in this area, or at least we touch that area. You're already seeing the red, green. It hasn't quite initiated. Kind of is here, depending on what you use, but we got about another 16, 18 pips. I think this one comes back down. Yeah, it's still got some more room to run, right? It's still got more room to run. I think we're bearish on this one. I think we're bearish on this one. Now, for some reason, if we can poke up to that 150 again, be looking for shorts. But I think this one probably pulls back down. Right, the emotional response is in. You're seeing it. The tops being put in, lower lows in there. I think this one. I think it goes a little bit lower. TLT getting blasted again today. This is the dollar strength move. Yes, that is one candle. Right, that is one candle. 85 all the way down. And again, it's dollar strength. Let's look at crude. Now I'm actually surprised, right? So crude, right here's where we were. We kind of pulled up. We said there's not a lot. It's just chopping. It's kind of in like a grindy phase right now. But now where we are right now with this 81 figure, you can see we do have a level of basing with some testing. So we're kind of getting in levels now, and there's a discussion, and we can go a little bit lower in here. We're kind of getting to a level now where all of a sudden any type of a pullback does actually make some sense, right? We finally drove through this level. We're at 82 right now. As I said, I would love to get down into the 81s. If we can get down into the 80s, that would be awesome. Again, it's had quite a drop, right? From Wednesday of last week up here at 95. That's $15 in a week and a half. It's not oil stability. I think OPEC Plus is going to basically tell people to pound sand. And even with a jobs number, we didn't really have any. And you can see when the jobs data came out, it did rally up for two and then ran into a wall. I'm actually surprised we didn't get more of a push up. And again, I thought, oil was overinflated, but I wouldn't want to put a top on this one because I truly believe if there's no change in cuts and China starts to come back with great data, I do think this thing rallies. But right now, I'm really surprised at it as mute as it is. And again, maybe it's Friday. Remember, this market closes early. It'll pretty much flatline at 1:30 in the afternoon, and it is done for the week. I'd love it to deteriorate just a bit more. Like, it'd be awesome. If we could close at 81.50, that would be so awesome. With, every week we're like, God, I hope it closes, below 92. 81.50 would be awesome. 80 would be, 80 or 81 flat would be awesome. But again, twice as many people just got hired back. That is additional demand, and there was absolutely no reaction over here. So I don't know. Maybe it's Janet. Maybe everybody's worried that Janet's like, no, we need to make oil $50 so that way Russia cannot profit off of it, right? So yeah, I think Russia's capped at like $66 per barrel. So it's like it'll never drop below 66. The United States were like, no, we're not going to give up money. So yeah, but this is overall not great for OPEC. OPEC Plus is going to continue to stand there. So not running many trades here. Now, natural gas, we did have that surge and just continue to move. Now, it did end up breaking through the 312 yesterday. And we talked about having a bigger level, and you can see we had a hiccup here and we had up, and then it all of a sudden just, oh God, fight. And now it's trying to punch higher. So this thing is still continuing to go. I think we are so far overextended in this right now. Natural gas rises to 9-month high as storage rises less than expected. They didn't say that it was declining. It just didn't rise as much as expected. So the storage part of it. Yeah. I don't think this is justified to be up here, and I get it. Supply, demand, storage. This one's been really, really quiet, right? This is one of those ones that I feel is like out of sync right now. Um, Again, we're at a time right now where there's such mild temperatures, and really for the next month, right? 2 months. I mean, they're talking about the storage levels there for when the cold winter comes, but I don't know. It's wishful thinking, but it hasn't been warm, right? We were supposed to run out of natural gas last year. We were never in a million years supposed to have enough to make it through, right? Europe was going to freeze, and Europe did just fine. So, yeah. I don't know. Love to get short this one, but as I said, I feel like this one is. I don't want to say it's being manipulated, but I feel like the price is just not an honest price right now. And we can go back and look at it, but unfortunately, it was so irrational the last time it was up here. I feel like you can't really. It's hard to use the prior price. I mean, we can do it. I mean, we could look back and say, okay, what did price look like the last time I was up here? You just see candles slicing through. Um, you know, can you draw much from this? There's a little selling there, a little selling there, a little selling up here. I mean, maybe we push this up top and say, okay, there's a decent top, but it'd been there multiple times. This was all the craziness the first time we sliced through. So again, talking about January numbers, middle of the winter, right? Middle of the winter. And now we're back to those same levels and not even using natural gas right now. So yeah, I just think these are a little rational. It's funny. I just find it so ironic. Yellen's like, yeah, let's make sure they don't make any money in oil, and then meanwhile, natural gas has been surging. Right? It's up over $1. So yeah, yeah. All right, so gold. Um, Gold, interestingly enough, up, 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 up. News is coming out. It drove straight down, and then it was a nice little long trade. So again, gold kind of the manipulation we expected to see. It's up just a little bit, a smidge at 1825. I don't think we can get above 1830 today. I do think this rallies up, and maybe over the weekend, if we see strong dollar weakness coming in, it does push back down again. But if you think about it, what's really driving this? If again, the data look great, right? The data look great, but was the data on the side that the Fed won't raise interest rates ever again, and the job market inflationary pressure is gone? No, it's the exact opposite, right? So I mean, again, there may be some short covering in here, people trying to take advantage of shorts in here. Overall, is it a fundamental strong picture for gold? I don't think so. I mean, I don't think the Fed looks at the data today and says, hey, yeah, based on that labor market, I think we're good. We can stop raising interest rates, right? We can start letting inflation creep up again. No, we're not even close to that. So overall, yeah, I think this is again a temporary move, kind of telegraphed with news. It's now driven higher, and it should be running into profit taking and selling. And again, there's selling here, and there's selling here, and there's selling here, and we're kind of playing with those same level of sellers right there. So, um, yeah, yeah, I think just watch it, just watch it. Probably more of a short coming up now. Silver doing a bit more, and yeah, this one we were looking for it to push up or push down into those two levels. It did push down, right? It did, and like 2 hours beforehand, I always say an hour and a half, but 2 hours beforehand, what did it do? It cycled its way right back down again, and you can see here. I'll remove this just so you can see it. You can see that it did go down, and it did grab a zone. Right there's your zone right there, and you can see that's what it ran into at 8:30. It came down, it grabbed it, and then it launched all the way back up, and now it's pushing right back down again. So, um, again, we're within striking distance of 21. It may push up a little bit. It's obviously up being 1.6. It's definitely over double the point 0.3 that gold is up. Um, so yeah, wasn't as clean though. Wasn't as clean. It did give us the pullback, and it did this right. It did this and go up, right, versus coming down and going up, right? So, eh. But the funny part is we're already starting to push to the downside. So, yeah. Overall, where silver is right now, I'm actually, it wouldn't be bad if it actually holds up here and can close up here. Um, that's not a bad spot. I think going into Sunday, I think silver would be a decent short, maybe for a little bit more of a week long position, right? Um, so if it holds, look for this to be red on Monday, right? But again, news trade is out, drove us down, pop right through the top, and obviously it's out now. Okay. What do we got Apple wise? Apple did not like that news, and again, a little spike back and forth. Tesla, what did Tesla do? Tesla also did not like that news. Came back in the buyers. We talked about the buyers down here yesterday. 152.40, and you can see we're chopping back and forth overall. Tesla's down pretty big though. All right, what do we got? Dollar again, parabolic move. It is retracing back again. ES, let's see what we got. And again, we've talked about this in the past. Something as big as non-farm payroll. Having an 8:30 non-farm payroll, always hard to trade opening print. Having a 10 o'clock Um, Interest rate decision, testimony from Powell, any of these major kind of market moving things always make trading the opening print more difficult because, again, people are kind of holding back their standardized trading and waiting to hear what the news is, right? Out of fear, out of caution, out of greed, all those reasons why. But obviously, the volume will be held back before a big news release or, be lessening after the response to a big news release. And that's kind of what we have today. Um, it's kind of goes back to that volume based trading. Does it really help you? Can you really see the orders that the big, the large banks and institutions are putting in? Can they put in slam in orders very, very quickly? Yeah, they absolutely could. Whoa, that was weird. I got a message from, huh? Oh, high school. So yeah, super choppy back and forth. Are you interested in trading this with the opening print? Not really. All it's doing right now is trying to retrace from the really, really bad news. And like I said, overall, is this many people additionally getting hired bad? No, it's actually a very good sign. It's just people are so scared of the interest rate part of it. And again, that's why we're starting to see it retrace because it's, again, the shock value is out, right? And now it's kind of like, oh, okay, well, maybe it's not as bad as we thought. So it's doing what it should be doing. Is it an opening print based trade? Absolutely not. Absolutely not. And all it did was chop back and forth on the 15-minute. You can see it's kind of crazy. NQ also rallying back, huge push down, starting to rally back again. Technically you're down a third of a percent, but if here's your 930, yeah, there's where price open. So had you gotten long today, again, parabolic move, gotten long from the open, you're doing okay, right? Again, twice as many people getting hired back this time and an additional 40,000 last time. Um, Based off of last month's reading, that's 380,000 new jobs. That's good. That's great. So overall, again, absolutely justified to be read with that data because they should be worried. But now that it's absorbing in, um, it should be going higher, right? Again, the news spike is out. YM. Now, YM, I'm actually surprised YM is not a little bit higher. I didn't see the breakdown. They do break it down by like sector and jobs and things like that. Um, the manufacturing data was probably a little bit off this time. I believe this data would have encompassed the strike, the auto worker strike. So it may have actually impacted the manufacturing job numbers a little bit. Um, so yeah, it may have affected it. It may have affected it. I'm wondering if that's why this one is more of a laggard than anything else. Not unjustified. But again, looking here, the red candle is the 930 candle in there. Was there anything to sell off of? No. I mean, it drove up, drove back down, but it's more or less just flat. Should this one, again, if manufacturing was truly the reason why we're not seeing it higher, again, that's going to be a drag on this one as well. And again, once the negativity comes in, it should continue to push lower. Now, Russell. Yeah, Russell looks very, very similar. And yesterday I said Russell would have the biggest move. It would be the most responsive to this data. And again, the reason why is because, again, you even mentioned raising interest rates. It gets harder for small businesses, which is what the Russell is based on. You don't have the cash on hand. You don't have the float. Again, being down the worst today, any surprise? No, not really. Again, more jobs hired back should also benefit the Russell as well because that means more also at small businesses. Um, but with everything that's been going on, I think percentage wise, there's probably a bit more big business type hiring back all this time. Small business, I don't think you're kind of trying to spend extra money at this point. So it is what it is. Not surprised. Again, opening print after a monstrous move like this would come in right here. You're not taking that type of trade. And you can see straight up, straight down, straight up, straight down, straight up, straight down. And then now we're kind of went down in one candle and now came back up in the same candle. So not a lot of movement. It looks like NQ potentially, and again, this comes all the way back up into here. Let's see. There's where profit taking would occur. 4 o'clock. It would be really, really close. Three. Oh, sorry. That's Friday morning. Yeah, so it looks like if this gets the profit, this should just be able to creep into green territory. If we go back up to the origin of the move, looks like this will just get to break even from yesterday. NQ looks like it will be much closer. It's here, yeah. So if we can get back up again, this is where the origin of that move occurs, right there. That will actually turn us green as well over here. YM, YM's got a lot to do, but let's see where we were yesterday. Sitting here, so a little bit farther. So if we are able to get back to the origin of this move, again, it would take a screen, but this one has a lot more room to run. And Russell, where are we at? 4 o'clock right here. This one doesn't have to go as far. That's where green is for us, right? That's where green is. I don't know. If Russell can really start putting a bottom in here, Russell could have the potential to actually turn green on the day. Right? Not green from the open, but green versus yesterday's close. It's really going to need some help soon, though. But you can see how volatile the Russell is. So, again, opening print wise, was there any setups today? Absolutely not. Nothing was in a great area. Too big of a push down, and they were all starting to cycle back again, as they should have. So, they did the right thing. And are they justified to be red? Yes. This does not help. And again, red because if you fear the Fed raising interest rates again, yes. If that's your fear, then yes, there's your red day. Is the data bad today? Is the market justified to be red based off of this data? No. No, I mean, this is a great sign. This, who cares? The market, you could say prepared for it. It didn't change. There was no change there. That's status quo. That should not move the market. I get it. The market expected that, but we didn't. This one here, this backs up and justifies the data we've seen, right? Not necessarily tradable, right? Again, it's a big deal. If it was 3, I think the markets would have much worse today. But this double here on the beat, a lot more people working. A lot more people working means, again, here you go. Blowout U.S. jobs report puts 5% 10-year yields in sight. Yeah, yeah. So, again, they're not wrong. What is this? Anonymous fan buys $4,500 worth of beer for Phillies fans a playoff game. Nice. There you go. Gotta love spending $5,000 at playoff games on beer, especially fan beer. All right, so that's it for today. Again, I wish there's always more setups on Fridays. Unfortunately, after something like non-farm, it's always hard to find more. But I think we're in a good spot for a lot of good setups next week, particularly gold, silver, and a lot of dollar-based pairs. We'll see. I think, again, look for that some dollar weakness coming in Sunday night into Monday. And then again, we'll have strong U.S. dollar leading once the U.S. market opens. We'll see. Maybe we get some headlines and things get a little bit funky this weekend. But overall, not unhappy with the data. Obviously, yesterday we called this one. We said watch the 0.3 come in. That'll be the big question if it was any higher than that. And again, it didn't change. So no change, and then monstrous change in payroll. So yeah, it is what it is. All right, with that, let's go ahead and do our drawing. Oh, that's yesterday. Giveaways. Did I not start it today? Did it not work? Chat was obviously not working. No, it did not work. I swear I said it earlier. Huh. I guess it did not work. That was yesterday. All right. Well, I will give you guys 1 minute to get in. It's the best I can do. It's the best I can do. 1 minute. That's it. It's weird. I swear to God, I said this earlier, and I was like, look, I'm ahead of the curve today. You know what? I'm ahead of the curve, but I was also making it tomorrow, so maybe that was my problem, right? That I changed the title to the 7th and not the 6th because I did it yesterday. So maybe that's what got me all screwed up. But I swear I put this in. Oh, well. It said there's nothing running, so this is the only one. So 30 seconds, and Mitch is taking the sucker. Mitch, we need some music, Mitch. Mitch, I'm going to stop it dead on, too. I'm going to sit here with my finger over the button, Mitch, for those that are a little bit delayed and lagged and thought they were in. Right? I know that the delay is not mid on anybody's. So we'll see here. There's 3 in. Ernest tried to put 10 in. Marina. Here we go. Mitch, you're about to steal it, Mitch. You're about to get it. Mitch, you got it. Bam, look at that. See, people are jumping in with no confirmation. So, all right. Mitch, you take this one, my friend. Let's see. Mitch took a cheapy. Position 22. There you go, Mitch. There you go. Let's see. It always helps. People sleeping, not paying attention. Whoops, not 250. So, go, Mitch. Look at that. Neuro's excited. Neuro's like, yup, I missed that. I couldn't get back in time. But it's good. Mitch hasn't won in a long time, so it's always good. Hey, take it any way you can get it. Sometimes, what is it? Something favors the bold, right? Fortune favors the bold. There you go. So it's good. Hey, listen. Mitch was able to get one. It's all good. Mitch has been a regular lately. So, all right. Take it where you can get it, Mitch. That's the market, man. You take what it gives you. And today, the market gave you an uncontested pip chip, and you got it. So, All right, with that, I'm out of here. I'll catch you guys Monday morning. Again, kind of happy with where the markets are, what the news is today. So with that, hopefully we got some really nice setups on Monday morning. And again, I think there's some homework to be done over the weekend. But I'll catch you guys Monday morning, 9:30 Eastern Standard Time. Have a great one. Have an awesome weekend. Everybody stay safe, and I'll catch you then. See ya.